Hey everybody, welcome back. Sive Morten is here with the Forex Peace Army.com. As usual, let's take a look at the Forex market. So now gold attracts all attention. You can see what's going on there. It's a really unstoppable rally. The market is somewhere around 38 area already. So on euro currency, we do not see such a performance, but here are some tricky things exist as well. And I suggest that it might be in some relation to the common shutdown. So as you know, all this stuff is so popular with the shutdown. And Democrats' demands from the Donald Trump is 1.5 trillion for their needs, and Republicans in their turn do not want to give it. So chances that this will be some compromise are really low. So more probable that some kind of shutdown we will get. Maybe it will be not really extended, but anyway, the fact really might happen. And it means that the government will not working. All government companies also stop working. So who will regulate the liquidity? Of course, some really very important authorities will keep working, but at the same time, the process of the regulation and in the case of demand for the dollars, this will be a bit more difficult to do this in a moment of the shutdown, in the environment of the shutdown. So investors probably will try to insurance this problem and to get some dollars in advance. And I'm not excluding that this works in favor of the dollar in the short term. It doesn't relate in any way to valuation or some fundamental background. It's purely technical issue, but it really could make impact. Now we see some hint on a possible reversal, minor reversal on the 10-year bonds, that some demand appears and yields start moving slightly lower. So here, as you could see, the same story. Yes, we've got this pullback, but it's not really impressive. Today market actually stands inside of this session. And currently we have two patterns in place, which actually could potentially, at least nominally, could work. But first, let's keep in mind that context on euro currency is bearish. So daily trend is bearish, weekly trend is bearish, and we do not have any clear bullish directional patterns here. That's why we should take a look at this mostly from the perspective of the bearish moment. And from that point of view, on a 4-hour time frame chart, for example, this kind of pattern might be forming. So retracement has happened. Market stands at the resistance area, as you will see a bit later on hourly chart. And taking it all together with the shutdown and overall technical bearish context with this recently relatively fast sell-off, we can't exclude the situation where market just will keep going lower and complete the 116-116.20 area. Besides, if you plant here the ABCD pattern, the OP has not been reached yet, so you can see it on the daily chart. It stands right here, 1623, while here is first extension of the, if it will be butterfly, around 1618, so just 5 pips difference, mostly stands in the same place. That's the first pattern that might be formed. Alternatively, if you take a look at the hourly chart, here with this most recent performance, you could recognize a kind of the hand and shoulder shape, right? So market could just form the right arm and start trying to break it up and keep going higher. Currently, I'm not really sure that market will show the straightforward upward breakout, mostly because of the strong support area. We have the confluence. This level, say, of 1750 comes from the top. So the 30% resistance is right from the top. So it creates the confluence resistance area here around the potential neckline. So from that standpoint of view, it seems that some response might happen. Maybe it will be in the shape of the ABCD. Maybe it will be just minor pullback. Maybe market will not reach this 17 even area, which is actually 50% support. I'm just drawing it to identify and show you that probably some response here could happen, and market could spend more time around this area before our prediction will continue. Second moment why downside action seems more or less probable is that because you take a look, this section is not the same as this one. It's more gradual, slower, and it means that we don't have any high pressure from the bulls here, although some activity exists, right? So it also stands in favor of the possible retracement. Besides, if we'll get this kind of the ABCD, will get Garry stupid to buy around 17 even area. So for the bulls, I would say that an area between 1685 and 117 is the area to keep an eye on if you would like to take the long position. Now, how we could combine both patterns, the grubber, the butterfly on the fall diaphragm chart and the possible hand shoulders here on our chart. It's quite simple because they are actually opposite. To get the position with the butterfly, we have to be sure that market indeed turns bearish. And that might happen only in the situation when market breaks down 1685 area. It means that it is going lower down to the bottom. And from that standpoint of view, it's really could say that this hand shorts is failing, and butterfly is quite possible. Until this moment, this pattern potentially exists, and I wouldn't consider taking short position while it stands in place. For a long position, it's quite simple, so usually we deal with the hand shorts patterns. Just take a look at the predefined support areas and make a decision if you would like to. You could try to trade it. Because this is the best point to position taking, because it really could save a lot of money. If hand short suddenly starts failing, your loss will be very small. So that probably, in 2 words, what we have currently in euro currency. Let's keep watching, and it's most interesting what will happen tomorrow, because nominally, or at least by the legal acts, the shutdown starts tomorrow. So that's all for now. See you tomorrow as well.